What's up, everyone? I'm TK Paps, and I'm back for episode 2 of a portfolio update, and I'm going to talk a little bit about Bitcoin just as a little disclaimer. So before I get started and actually talking about Bitcoin and of where the crypto market is currently at, as I said in the first video, the structure of how I want to record and make these videos is that I want to first go over where I'm at with my portfolio. And I've been continuously investing, and I would have liked to get a video out sooner, do it on a week-by-week basis and what investments I get in. But here we are anyway. So let me just get right in. And I think in future videos, now if you're listening, this obviously wouldn't pertain, but I think there'd be a lot of value in a screen share and just going through this application that I built. And I think I also didn't fully get into the first time that I recorded as well, that talking about my software engineering background and experience. I actually built this online or small little web application that tracks my portfolio publicly that anybody could view. So every single investment that I make, you'll be able to see. All you have to do is go to https://tkpaps.app. And you'll be able to see the portfolio performance, all the investments I make, and you'll see on a granular level which individual investments, how much they're up, etc. So I think I might have gotten a little bit into it the first video, but let me just do an entire portfolio breakdown. One of the first things I invested in was one share of Google, and I think $250 to $500 worth of Bitcoin. The Google share is up almost 12% as of recording this, which is great. And for people that follow the crypto markets, Bitcoin, and especially, which I don't have in the portfolio, has been on a great run. Bitcoin at this point, my holdings in the portfolio are at $1,300. I'm up about 3.4%. And then I have a BKAG bond, which is just going to pay fairly decent dividends. I bought a share of NVIDIA, which is down slightly. And then I have a few shares of an international index fund, just tracking, developed international markets. That's where the fund is at right now. My goal, as I think I said before, but just to reiterate, is to first get $10,000 into the fund. And I'm basically investing $250 a week, but sometimes more. It's a little variable. I think I've gotten on average $1,500 a month. Right now, the fund is sitting at $2,000. It's up 3.45%, or $1,999, with a $66.67 gain. So pretty happy with it, but it's been so short that it doesn't necessarily mean anything. I'm really just trying to get the money in the fund and then kind of reallocate and go from there. A very long time horizon I'm looking at. But obviously, if you're up, that's great. The other thing too that I have on the portfolio is I'm tracking a position I have in a liquidity pool, which I definitely want to make a video about that. It's very cool, technology, kind of a DeFi thing in crypto. Right now, I think it's been a little over 3 months, and I've seen with a gain on some of the assets in the liquidity pool of a 21.63% return after only 100 or so days. So crazy stuff that you could do with the liquidity pool. If this was an entire year, the APR with the capital gains included in it is coming out to almost 75%. So that's phenomenal. A lot of that you see is cash too. And I'm sure this sounds way too good to be true, but trust me when I tell you, it's legitimate. It's just a protocol where you basically take your liquidity or your assets, you provide them to a decentralized exchange, and then instead of a market maker, like a bank that you use, a brokerage firm that you use who makes the market and is that intermediary that will buy and sell in and out of the market that's trying to purchase whatever asset you're trying to purchase. You essentially take, let's use US dollars and Ethereum is a good example. You take a certain amount of your own US dollars and a certain amount of your own Ethereum, you deposit it into this liquidity pool, and you can't touch those funds. But what people will do is the program or the application will use that liquidity as in and outs for people buying and selling in that market. And then you just get fees from basically providing that liquidity. So you don't need a centralized market maker or a brokerage firm to be able to buy and sell assets. Super high level. I don't even want to really get into that, although I think I probably said too much already, but definitely a video or an episode I want to record soon. And I've been in the crypto space for a little bit, probably close to 4 or 5 years now. Unlike a lot of people making videos, I haven't made much money, but I do have some cool stories of stuff that I have built and done, and just experienced. So definitely want to talk about that too. That one of those episodes I think is going to be pretty solid in the very near future, talking about a project I built. And just as a short little teaser, I guess, on paper I made $100,000 in a day and subsequently basically lost it all, but it was a crazy experience. It ended up being really fun. I learned a lot, but just definitely a crazy story. I think it was 36 hours, and I had made, again, on paper, there's other concerns, which I'll get into the details, but $100,000 in paper gains in 36 hours. So I'll get into that at some point. But as for the portfolio, everything I said, that's where it's at. Again, you could track it at any link in my bio, but I said it before of the actual URL. If you want to just type that in, you could follow every single thing I'm doing and check my performance. I don't have anything to hide. This is kind of why I'm doing it, just exploratory, very experimental, seeing where it goes. It does really interest me. I have a affinity towards, I think, finance and technology, and that's partly why I love crypto, is it's this kind of intersection of the two. But I do enjoy it a lot, and which kind of leads me to my next point, which is not really related, but I'm kind of just talking through what I'm currently doing. I'm looking into just very casually studying for the Series 65 exam, of potentially long-term horizon, becoming an RIA. I think it sounds fun, and maybe have a niche perspective on managing people's money. And with a crypto perspective, I think there's a lot of people that sometimes it could be a little technically heavy, but it's getting a lot better from where you had to start back in 2017 trying to buy Bitcoin or other things. I don't even think it was that bad in 2017, but very hard to try to invest in crypto. But I think I have a unique perspective. The liquidity pools, like I was just talking about, is a very interesting, novel financial tool or instrument that I think a lot of people don't know even that it exists, but let alone have the skill set to go out and invest in it themselves and know what they're doing. So I think I could probably provide value, just a different perspective, where I'm not like, oh, give me your retirement money, I'll put it in an S&P 500, I'll manage everything, you don't have to worry, you could just call me or check the portfolio every once in a while. But anyway, that's a complete aside, but the feeds into the overall vibe of this episode of that. I just want to talk a little bit about Bitcoin, and I guess honestly because it's completely popping off the overall crypto market as well. But some of my thoughts of why I think this is occurring and the value that I see in Bitcoin. So this whole crypto bull run market really started in around January of 2024, when the SEC approved the first Bitcoin ETF, and then Ethereum ETFs were soon to follow, I believe that following July. And we saw a really big price move in Bitcoin. I think it quickly went to around $40,000, $50,000, hit an all-time high in March at around 70, which was only like $2,000 higher than the previous all-time high. And there was a lot that went into this where people were saying, oh, it's not a real all-time high, because since Bitcoin pumped to 68 the first time, the amount of money that was printed kind of debased the underlying currency, which is the US dollar, which meant that $70,000 now is not worth $69,000 back in 2021, which I think is 100% true, and a really great segue into why Bitcoin is the future of money, or at least globally, super macroly, where it could be a reserve asset for countries, large corporations, and just overall commerce throughout the world. We've seen that with fiat currencies that governments just have unlimited control of how much to print, and because of that, the market has just been flooded with whatever government currency we're talking about. That is the main contributing factor to the inflation we've seen, not just necessarily very short term in the past 4 years, where I believe over 25% of the US's money supply was printed. It's not the best example to look at a singular commodity or good, but I think every single person that's watching or listening to this has felt the real strong effects of inflation, especially in the last 5 years. And what Bitcoin does is introduce the concept of sound money, where you could argue that fiat currency is unsound, and Bitcoin is inherently and basically immutably scarce, durable, and divisible. Has value across space and time. And what this really means is, where it's scarce is that the Bitcoin protocol doesn't allow any more coins to exist than the 21 million that could potentially exist. Right now, the supply of Bitcoin is close to 20 million. I believe the last Bitcoin will come into circulation in 2145, which would complete the Bitcoin supply at 21 million. So unlike basically any government that's using fiat currency, who can just print as much money as they want, debase the currency, which leads to inflation, there will never be more than 21 Bitcoin to ever exist. And I think this is a large reason why we've seen, obviously it's a very new asset, very volatile in the short run. But if you look at any chart of Bitcoin, it's literally only gone straight up. And this is because it holds its value. There can't be more printed or produced randomly. It is very consistent of when new Bitcoin enter the supply. We can track it. We know exactly how many are going to be, to almost days of what the supply will be. And also what it does is it doesn't singular control to any one entity, whether it's a government, corporation, anything. It's completely decentralized, and for those that don't know, that basically means it can participate in the Bitcoin ecosystem. It is completely permissionless, and really all you need is an internet connection, and you can start transacting and interacting with the blockchain. To get a little more technical, transactions are verified via a proof of work consensus protocol, which essentially means that if you were to make a transaction on the Bitcoin network, these nodes across the globe, who are essentially anybody who is just running the Bitcoin software, would try to pick up that transaction and verify the transaction via this proof of work consensus mechanism, which may be out of scope of this episode. I mean, I could, in the comments, if you want me to go deeper into how Bitcoin works, although I'm sure there's a million videos and many of whom are far more articulate than me. But yeah, it's completely decentralized. You could buy Bitcoin or send Bitcoin to whomever across any border. And this really leads to why Bitcoin, I think, fundamentally has moved up so much in value recently. I think people are starting to realize that a lot of the money that the paper printed on isn't worth anything, and we need to return to a hard asset like gold. I mean, Bitcoin is because it's divisible and it can move across space and time, which gold can, move across well because it's highly durable, but it's hard for gold to move across space. Bitcoin's perfect for those examples. So that's, to not get too technical in the Bitcoin side of things, that's the bit, and why I think, non-technically a lot of value. This has been an economic conversation about Bitcoin opposed to the technical side of it. But I think that's why we've seen in recent months, in the past year, really huge price action. And if anyone else is following just a very short kind of narrative on the current landscape of the crypto market, we've seen Ethereum 4,800, which it just recently in the past week crossed its own all-time high. There's a ton of institutional money tokenizing assets, moving on chain, and they're using Ethereum as the main blockchain to do that. I'm sure an episode will come and I'll explain and just talk about and give my thoughts about that. But it's very exciting times in the crypto market. And I think a lot of the movement is because people are realizing that there's a better way to transact. No innovations have really been made to money since the credit card, which I believe was introduced in the 70s or the 80s. And that really didn't do much from a back-end perspective. Infrastructurally, you still had to deal with centralized banks who would take 3 to 5 business days to transfer your money. There was no sort of ability to build on top of these infrastructures. PayPal, there's like MoonPay, which is pretty, heavily involved. But like, let's take PayPal as an example. That kind of made it a little more peer-to-peer in terms of sending and receiving money, or Venmo, which people, are probably with. But it didn't make it any easier, in the of this entire banking infrastructure to send or receive money and basically do anything else. The amazing thing about Ethereum and some other layer 1 chains is they start to make money programmable, and you can build applications on top of these blockchain networks and start doing a lot more with money. It's something we've never seen before, and I think it's an innovation that's long overdue. But again, not to get off on a huge tangent, but I think that's a huge reason why we've seen such a large movement in the crypto market. And I think it's going to probably continue. If you look at charts from 2021 to, kind of say, I think there's a lot of room for coins to move. And this seems to be pretty close to just, we don't know what to expect. It could go anywhere. Obviously, things could go to zero, something could happen, a black swan event, etc. But, the right outlook is looking really, really good. Exciting to be a part of it. Definitely won't shill any coins or anything like that. But, if you're in the crypto market or you are interested in hearing anything else, please let me know. But I think in the next episode, I'll touch on liquidity pools. Maybe I'll talk about my story in crypto, building an application, or maybe I'll just go back to more traditional finance, and who knows. But stay tuned for that. Always appreciate the viewership, the listening. It goes a long way. And just personally, just trying to stay consistent and put out videos. So any love or like that really goes a long way, and I really appreciate it. So thanks, and stay tuned for episode 3.